I had the I gotta put in all the pictures to these TCLs.
Sorry, Jared, I just can't see your screen.
Okay, give me 1 sec. Let me pull them up.
Okay, no worries.
Give me 1 sec.
Okay.
Sorry. I gotta get the prices for the yen. And for one other one. Okay. Mm. Okay. So for the week, did I did a little bit of day trading.
Okay.
So I didn't do any TCLs for those. Um, but so okay, here they are. First one I did was a CAD yen that closed out. My computer shut down last night for Windows updates. I like put it to sleep
Mm-hmm.
and it shut down and removed all the pictures because I didn't save it yet. I have to all in. But this was the CAD yen short. So overall, it was in an uptrend with a change of trend with the lower low. Then it formed a lower high, and then it gave us an M3 to go short. So yeah, it was at a level of equilibrium, but based on the downtrend, it was kind of an equilibrium supply,
Mm-hmm.
and it formed a lower high. So I gave it for T1, T2, T3. So 81.24, 80.52, 79.95. So it's T1, T2, T3.
Okay. Question for you.
Mhm.
Um, can you please explain if you go through, you scroll a little bit further down for me, please?
Yeah.
All right. So
A little more.
T1, you have a 95%, right?
Mm-hmm.
Then T2, you have 85, 80 for T3.
Mm-hmm.
Why did you give same equal position where one is lower than the other? And then you have an only overall probability of 87%.
Um, not sure. I'd say just because I mean, they're only off by 10%. So yeah, I probably should have done 4 and then 2.5 and then like 1.5.
Yeah, so that's something perhaps you'll have to um, check because I mean a discrepancy of 10% is that's quite a lot, right? Because you have
Hmm
15%, you have 5% probability you may lose compared to 15% probability that you may lose. So if you
hmm
do the math correctly, so like 3, 3, say for example, 3 target point is at 81.24. So potential profit is $12.07. And now say, for example, T2 didn't, pricing get a T2 since you have an 85%. What if it went down to your stop loss of 82.55? So 82.55, that's
Nice. 80.
80 pips.
Hmm
So 80 pips, so you're risking $19.42 right there to gain $12.07. So now you're down $6 plus
Yeah, plus the others
12
stop too.
$12. So you're
13.
down $18,
Hmm
right? Now, if you change the numbers, say for argument's sake, you put 4 or even 5 and 1. Say you put 5 and then 1, or say 2 and 1. 5, 2, and 1, just for argument's sake in regards to
5,
5, 2, and
1.5,
1.
1.
Because you won't
That
be able
one's.
to do by, I don't think, Wanda, does Wanda let you buy in 500 units?
Yeah, you could buy one unit like literally $1 if you
Okay,
wanted to on Oanda, but the financing you have to get like 20 or 30 pips to just cover your financing cost.
gotcha. So let's just put whole numbers there for now, George. Yeah, say
Okay.
5, 2, and 1. 5, 2, and 1. Yeah, okay. So now your potential profit is $20 minus 12, say $13, then you're down to 7, and the other one on the bottom is how much is
850 or
say
650.
650. So you're up $1.50. At least you're not losing anything, right? So
Yeah.
50, say $6, say yeah, you're up 50 cents or a dollar. So at least that on the next trade, yeah, you're up a buck. At least on the next trade, and say for example, the next trade it was a winner, and for argument's sake, you made say $50 on the next trade plus $1. Then at least you're up $51. You're not down on the trade. So um, the question now is, what is the goal? The goal is to keep the profits that you've made and not give the profits back or more. So I
hmm
believe that's the most important part, and that's what, if I really look back in terms of my performance in the past, how did I make the money very quickly, is because of that aspect, to manage the risk by not giving back how much in terms of what I already gained. Because if you're getting into this state, then what's the emotion towards that? The emotion is negative, right? Feeling
hmm
more like uh, regret type. If only I should have done this or this, right? The management component. Yeah. So just be aware of that uh, by giving most weighted with the highest probability to the closest, especially if your overall probability is low. It's different if you have 100% probability on the overall, And then you're saying, well, if, say, for argument's sake, this is what's going to happen. Bam, right there. And it's coming from like that. And so you got it, say, for argument's sake, here's your entry, and you know that it has to create a new higher high right there. So if your overall probability to create a new higher high is 100%, then to go to T1, T2, T3, then all of them are 100%. Then you can do that by doing, say, 3, 3, and 2, or 1. Does it make sense there, Jared? Because they are
Yeah.
within the realm of the distance of where your overall probability is based on your forecast. So if you're projecting or you're forecasting that the price will get up here, then if you're basing it your target points on the fibs, then technically it will surpass everything here within that distance. It's different if, say, this is your projection is point X from point E, and then all of a sudden T1 is, say, at point Y, and then T2 will be at point Z. Here, point Y will be 100%. But if you're projecting that it will go here in terms of point X, but you want your target point to go to point Z, which is now beyond your forecasted price, then you have 100% here, but what are the odds that it will break through point X? Then the probability will drop down to probably 50%, unless it comes back and then breaks through point X. So it'd be less than 50%. Then I'll put everything on point Y and nothing on point Z or point Q. For T2, T3, nothing. I'll put everything on point Y. Okay, so that's something I believe that you have to work on.
Okay.
Because, yeah, this is the CAD yen, right? At the end of the day,
Yep.
were you at a profit? Did it go
I
your way?
believe so.
Yeah.
Yeah, I closed it out at T1, all of it, or a little under T1,
Okay,
because it didn't
so
want to play ball at demand.
exactly. So notice here, you closed everything on T1. See
Hmm.
why? Because your highest probability was at T1. And
Yeah.
hence, if your overall probability was already at what, 85%, there's no way
Mhm.
that it can go to T2 or T1. I mean, there is a probability, yeah, but there is a slight probability it won't. 1 second, please, Jared. Okay, just give me 1 second, please.
Yeah, no problem. Yeah.
Sorry, Jared.
Sounds good.
Yeah. So that's by experimenting um your yeah, this way for me this one helped a lot. And this is what I ignored because the numbers they don't lie, right? Um
Yeah.
for me I have to put everything up as well and no more of this. Oh well, I'll put uh X amount and just not winging it, but just estimating. That's the word. So I'm
Hmm.
estimating things in the past rather than okay, going back to the plan and then really calculating this. This is the subjective aspect, but once you can have that, you can measure it through pretty much, you can feel it, right? Like the way how you felt. Well, it's not playing, so I'm closing it at 81.53. So that's what you
Hmm.
did, right?
Yeah.
So, which is great. It was at, well, your target price is 80.52. So if you just scroll up,
81.24.
81, you close everything at 81.24,
Oh
but you,
no, I got it at 81.50, but
exact.
my T was 81.24.
But you close T1 is 81.24, but you close everything at 81.53, right?
Hmm.
Yeah.
Yeah.
So you even ignore 81.24. See?
Hmm.
So that entry price right there, it didn't even go to T1. So in other words, you actually put everything on T3. So you have 7 and 1. So you knew. So if you go further up now to your, if you scroll up, please, here, then you have a bigger faith by you closing at T2. And that means then that you have 100% probability here, then you have 200% probabilities because you ignored T1. So you went all the way to T2. And
No, I went under above because yeah, I closed it here, but the target was here.
huh. uh,
Or it was like right there. T1 and T2 were those two.
okay,
One.
then can you scroll down for me for a second then, please?
Hmm.
Now I'm confused.
So it's
Oh,
81.53 instead of 80.
82. Got it. Gotcha. Okay, so um, at least it's in like halfway. So in other words, you added more. Like that's another extra 30 pips almost from 81 from T1, right?
Hmm.
So you knew that it could go further, and hence you only have a what 95%. I think you stated
Yep.
95%
Yep.
for T1. So technically, that shouldn't be 95%. That would be 100%, technically, because it's beyond your target point.
Hmm.
So if your probability is only 95%, is, you're like, yeah, I'm sure, yet unsure, because there's that 5% deficit right there.
Hmm.
If you have a level of confidence that it will go 81.24, there's no hesitation to put it 100%. T2,
Yeah.
yeah, maybe 95 or 90%, and then you saw that it wasn't moving, and hence where you got out, right? So that's, yeah, something you'll have to check it in regards to that, and then yeah, maybe then leave the one right there, put the one to break even because you're up already, what, 81.74, you're up 60 pips, 50, 80 pips, you're up 80 pips, and then just put 81, your stop loss to 81.84. So it doesn't matter if it will drop, then you're still basically in the money. What's the current price now of the CAD yen?
Um, current price is 82.79.
82.79. So yeah, this is a short one, right? A short
Yeah, it
position.
didn't go any lower than yeah, it didn't go any lower than this point for this whole week.
81.74. I'm sorry, this is a short position. So when we're talking about
Yeah.
80 pips, you're up 20 pips.
Yes.
Yeah.
Yep.
So yeah, something like that. You'll just have to play the game with it, like experiment with it. But definitely those numbers, these numbers, they don't lie, and these are already based
Hmm.
from
Yeah, it
measurement
was
of the facts that you have, and it's also part of your intuition.
yeah, these were with hindsight kind of inaccurate
Mm, exactly.
because the major trend was still up and it was just the minor trend potentially heading down. So
Yeah. So that's good. It just yeah, you'll just have to. For me, it's just like driving a car. Yeah, that's where the subjectivity lies. Everybody knows how to drive a car because everybody
yeah.
has to learn the rules, the rules of the game to drive a car. But everybody's different in regards to measurement of stopping the car, right? Being where you're tailgating, if you're going to overtake, all the type of stuff it has to be put in consideration in regards to the measurement, and you're not even aware of it. The brain automatically calculates it because of the way how you
Mhm.
feel in terms of you driving the car. Same thing in trading, in my opinion. You know the rules of the system, you know the rules of the candles, you know the rules of technical analysis, you just know the rules. But when you are in that moment, or when you're calculating, it is that's where the subjectivity lies in regards to the probability. And then you can feel it, like that's why you're monitoring. It doesn't feel like it's gonna drop even further. It's not performing. If it's not performing, hey, I'm gonna take all my profits and just run because it has a low probability anyway, or medium probability.
Mhm.
And then if you feel that it's gonna go the other way around, then follow your gut still and be courageous and change your position from short to long, because you can feel that, and you have to keep on following that intuitive process. Be with it, right?
Mhm.
Go against it.
Yeah.
Nice. Okay, that's a good one right there.
Okay. So the next one I did was well, so for this one I did the TCL but didn't execute the trade.
Hmm.
It's the British pound yen.
To go long.
Uh, yeah, to go long based on the daily.
Mm-hmm. So why
Uh,
didn't you
and
execute
then
the
the way that one panned out. Um, trying to think.
interesting? Because you already have it there too. You're ready to execute the trade.
Yeah. Look, I think I was just really uncertain with it, and I guess this box shouldn't have been checked right here. Yeah, I didn't check this one. Um, yeah, it just I guess wasn't in line with what what I felt it was gonna do. So I wasn't willing to take full responsibility for it based on just the uncertainty.
Mm-hmm.
So yeah, that was that one. Uh, uh, oops, CL5. Oh, did I skip a number? Oh no, I didn't. This one's 6. So the next one I did was the Euro USD long on a
Sorry, Jared. I beg your pardon.
mhm.
Pound. Sorry. So, why did you execute the pound yen again? Sorry, I got distracted there.
I wasn't willing to check this box just due to uncertainty.
You weren't willing to.
Take full responsibility with the trade.
Okay. Due to uncertainty, of which one?
Uh, British pound yen
Yes. So, what
for the
is
daily
the?
M3 to go long.
Yeah.
Here,
So,
here was the here
what
it
is the
is right
root
here.
cause? What is the root cause of you to not take full responsibility of the trade?
Because this was the entry right there, and there was a chance if this was the confirmed low of the day, we could have a lower high, and we're at a level of supply.
Okay, okay. There is so. Let me go through this. And this
Mhm.
is why I have that food for thought today, where it said, um,
The passage from the book.
yes, that you are not your mind, and that thinking is a disease. So, hence analysis paralysis. So, if we think way too much, the thing is simply now thinking. When you're thinking, is it now based on perception or
Um,
based
it was
on?
MTFA
Got it.
because yeah, right after it dropped a whole bunch. So it was like on the 4 hour. That was our entry right here.
Mm-hmm.
So it would have been good there, but then yeah, it took a dip, and I think it was, let's see, they had this TCL for the 14th. Yeah, the 14th. So it was like here where the market close was between these two candles. So it would have been like right about here. So at a level of supply. So I didn't want to take the trade based on that. Then it came up. Then I was asleep for these. And then when I woke up the next day, it was an M3 to go short. And I was like, well, should I take the long on the daily if this one's showing a very forceful M3 to go short? Then this candle happened and it came right back up to that same area I didn't want to enter the trade based on. Then it came here, showed the high-low jab to take a short with a kind of a Hail Mary as well. So just due to all that, I was just yeah, didn't want to play ball with that one.
Gotcha. Um, so from what I can hear is that you have a lot of conflict to make a choice.
Yeah,
And
definitely.
what is that conflict is the reasoning based on the decision making process.
Mhm.
decisions based on reasoning. Therefore, when you have conflict, then you're no longer thinking of what the market is actually really telling you based on facts. When you have facts, you don't have any conflict.
Mhm.
So conflict to make a choice creates uncertainty. It's so interesting because human beings, like based on behavior, is that when a person thinks too much, then it creates the uncertainty, and hence, if you're now creating story that is going to happen in the future, which it hasn't happened as yet, then it creates an emotion of anxiety. And when you have anxiety, then you have stress. And you have stress, you get worried. When you're worried, then you don't think straight. Because it going, and that's the thing about training, it goes up and down like a yo-yo, right?
Mhm.
Um, so that's when and I bet you when you're doing jujitsu, on the other hand, you don't think because you have
Yeah, I
to
don't
make
feel any anxiety.
exactly because you're making a choice within the moment. You're not thinking because there's no room for thinking. You have only room for reaction. Reaction versus thinking. That's a big difference. The reactive mode versus the thinking mode. You're reacting based on the self versus the thinking that is based on reasoning. When you're thinking based on reason, then you're thinking now based on the internal conflict of the monkey mind. Should I not? And you're basing that the shoulds, the coulds, and you're basing it on mainly on emotion. Because think really, let's think about this very well. It doesn't matter where you enter. You could enter it over here based on the 4 hour, because at the end of the day, whereas the entry point was based on the daily time frame. Lower time
Mhm.
frame is only based on where correction modes. Like here, you could have an entry point right there when it corrected itself halfway between supply and demand, a point of equilibrium. So if you didn't react through there based on the plan, and now it went over here, then it goes back to the thinking. Oh, I should have gone over here. I'm too late. It's not a level supply. Screw it. I'm going to wait. And then it's over here. Oh, no, hang on a second. I don't want to get in because, there's a lot of sellers. It's now M3 right there. So I won't get in despite being a level demand. And then you're saying this, hang on a minute. I don't want to get in because it's just way too volatile and I already missed it. And the next thing you know, it's already there. See, in terms of the conflict, the monkey mind and yourself are currently now in a fight,
Mhm.
right? And hence is why on
Yeah.
that passage right there, um, the mind is a superb instrument if used rightly. Used wrongly, however, it becomes very destructive. The destructive is the conflict between you and your mind. To put it more accurately, it's not so much that you use your mind wrongly, you usually don't use it at all. It uses you. And hence, because of the thinking aspect, it is not consuming you because you are no longer reacting based on you, where you can have full control of your mind. There's a big difference. Your emotions are now controlling you based on your thinking versus you controlling your emotions where you have control of your mind. That's why you believe that you are your mind.
Got
This is the delusion. The instrument has taken you over. That's why you are not your
it.
mind when you are thinking. So the awareness, once again, of the self is where the challenging part is. Okay, that's why you have conflict. But with Jiu-Jitsu, you don't have any conflict because you're just being yourself. Why? Because you're reacting. You're not creating any story. Here, you're creating a story that hasn't happened. Is it really based on what the market is telling you, or is it because of what you think it to be? In most cases, it's because of the story that you created for yourself.
Yeah.
Right?
Got it.
So, yeah, that's something that you have to be aware of because you already know it. Based on the analysis, the facts already is giving it to you. But you wanted the better price, and hence you looked at the smaller time frames and MTFA, but you didn't react. You didn't take it. So right, that's the same behavioral pattern. So if you go through all your notes, same thing, Jared. So how do you now break the pattern? Break the pattern is reacting to it, however, taking full responsibility. What is that responsibility? So if you go back now to your TCL for me for a second, please.
Mhm.
Look, you took a trade that is 85% or 87% with the CAD yen. You didn't take a trade that has a 90% probability of the overall. And you also have a 90% with T1. However, you're not willing to take full responsibility with this trade. What is your worst case scenario? Well, your worst case scenario is your stop loss of 137.29 to risk $86. Then if not, then if you're not willing to do it, then what can you compromise to take this trade, not to lose 86, but to lose a percentage of it?
A smaller position size.
Exactly. Perhaps rather than 10%, maybe do a 7 or a 5. I don't know. It's something that it's only you that knows, right? That
Mm-hmm.
you're willing to take full responsibility. Now, if you're not willing to take full responsibility, period, then this is not even the case in terms of the probability. You'll have a less than 50% because it's a very low probability.
Mm-hmm.
And I won't take the trade if it's a 50% or below probability either. 90%, that's a high odd. You only have a 10% odd that you may lose. But the question is, what is that 10% that you may lose? Then this is where you calculate, well, 10% that I may lose. How much did I already make for the week? Well, say for argument's sake, I made $20 for the last trade. How much am I willing to risk? Am I willing to risk the whole 20? Well, if I'm willing to risk 10, half of the 20, then at least I would be able to place this trade. Now, if I have 100% confidence that it was going to go, then it's a different story. Then I'll put 10% full out because I know that I will make another $20. Okay, so
Got it.
yeah, that's something that you'll have to uh, not experiment, but something to play that you have to play around with. Because notice now it went your way. So perhaps there's also an initial thought of like, dang it, I made all this and I didn't put in the trade. And you have to go back as well in the past. There's a past trades where you've done this quite a lot. Analyze it, you didn't take the trade, and it went your way, right?
Mm-hmm.
Cool. Any
Yeah.
questions there, Jared?
Um. No. Sounds pretty good. I guess it's like when I'm in the moment and I see kind of like how that one was where it showed an M3 to go short. uh, on that one on the 4 hour time frame. I guess I get twisted by those facts.
Exactly.
So even like without thinking, I'll
Mhm.
still get kind of twisted based on just analyzing the objectivity behind it.
Yes. Yeah, I can relate with you because, you know, the shorter term time frame plays a big role because it's moving
Hmm.
quicker than the bigger time frame. And that will
Yeah.
affect definitely your thought process of, and we tend to forget now what the whole overall plan is. So just imagine this, rather, this is the main focus. Then you go, this is say this is the daily. Then you go to a 4 hourly time frame. Then you go to a 1 hour time frame. The next thing you know, if you're playing the 5 minute time frame, so where's now the focus? The focus was meant to be here. But once, and this is the thing, the mind is so powerful that once the focus is now dealing within the smaller time frame in here, it ignores the focus of the bigger time frame. Because
Hmm.
here you have a lot of movement, a lot of noise. Here it's cruising. It's not even doing anything. It's actually probably stagnant because it's on the daily, right?
Hmm.
And it's stagnant right there, but shorter time frame, it's vibrating, going up and down, going up and down, going up and down, going up and down. Then you tend to forget what the overall plan is. But the focus is over here, and hence, oh, I got to short it, or no, hang on, I'm not going to enter because it's dropping. Rather than, oh, great, it's in a demand, better price of buying in, boom, let's go for it. That's multiple time frame analysis.
Got it.
Okay,
Sounds good.
nice.
Cool. Thanks, Ray.
You're welcome. Sorry, I don't mean to bombard you today. Uh,
Oh
but
no, that's fine. That's how you learn, right?
yeah. At the same time, I guess the part of the group coaching is, yeah, I have to also to be honest and see where I see in terms of the outer perspective.
Yeah, I prefer you to be honest than to sugarcoat it, because then I don't learn anything.
Exactly. Cool. That's why,
Cool.
in my opinion, your homework is to go through in terms of what we discussed. You can watch the video again and then recreate a plan in regards to Ray Dalio's step, right, of the design. So if you go back once again on page 2.3, page 175. Yeah. See, that's why I, I, I just want students to be like, you're very consistent. Um, ballet is still lately. For me, it's also challenging because I have to discuss this with my coaches, and it's good for me too because by me doing this, it's also good a reflection from other people's mistakes, and I relate to it because I also did it in the past or I did it in the week, and like, oh dang it, why did I do that? Right. So there is a
Mhm.
these are the things. So 2.3, 175. Diagnose problems to get at the root cause. Now that we have found that in terms of the root cause, um, focus on what is before deciding what to do about it. Distinguish proximate causes from root causes. Recognize that knowing what someone, including you, is like is like. We'll tell you what you can expect from them. And then you redesign the plan, go back before you go forward, think about your problem as a set of outcomes produced by a machine. Remember, there are typically many paths to achieving your goals. Hence, this is one of the numerous paths that you can achieve your goal. So the measurement of that, recalculating your position size, taking responsibility based on putting an entry where you have stated, hey, look, I have that probability. Measurement of T1, T2, T3, the amount of position size that you put in. Right? Cool.
Yeah.
And then focusing, it's okay to focus on a shorter time frame, provided that you go back where the major focus is still on the bigger time frame. That's the whole purpose actually of MTFA.
Got it.
Cool. All right. Did you find this a very helpful session, Jared?
Yeah. Yeah, really helpful.
Very good.
Yeah, so I took just 2 more trades for the week.
Nice. Then overall,
And then, yeah, 2 more after them.
excellent. Then overall,
Overall performance was, because of that, here, let me share this one with you. This was the one where the stop loss actually got hit. So it was the M3 on the 4-hour right here to go long.
okay.
And then, I didn't put the close image in. But it was a long, it like closed me out immediately once this candle finished.
Okay.
Right there. This one closed all the way like down to the stop.
Okay.
Just one big red bar. So then that one, minus 23 bucks. So I made 13 on that first one. I didn't take any trade on the second one. This one put me down a total of minus 10.
Okay.
The USD yen put me back up. Here. Did I closed out of it? Oh no, I didn't. So then the USD yen put me up 23 bucks. So I finished the day at plus $13 about, almost plus 14.
Okay.
And
No
my
problem.
goal was at least make 100.
Okay.
So I got under the goal.
Very good. Very nice. That's good. But at least like once again, like over there, right? You have an 80% success rate.
Mm-hmm.
So to have an 80% success rate for euro US dollar, is this the euro
Mm-hmm.
US dollar? No, that's
This one's the yen one.
yeah.
Here's
Where's
the
the
euro.
euro dollar? Yeah, see, you have a year 80% success rate, you only put 2.3%. 2.3, but because of the stop loss is
That
higher.
was from the TCL calculation.
Oh, okay.
Should I not use this?
Actually, that's just a guideline, to be honest. I believe that's
Okay.
pretty accurate. So, but if you wish to, like, if you want to change the maximum risk to something else, so 80%, but you put 2.3, and hence it gave you 4 right there, but you put it as in 5. So,
Yeah, I just rounded up.
yeah. Hence your percentage at risk was
It said,
$23, which is very good because you're only willing to risk 2.5% basically. Cool. Very nice. All right, we'll wrap this one up, Jared, and we'll go through the next one, okay?
All right, sounds good. Thanks, Ray.
You're welcome.